Hello, hello everyone. Good morning and welcome to this pioneer, first of its kind, fireside chat hosted by Tech Hive Advisory and Hamuligo. And as you all know, it's titled Unlocking Funding Opportunities for Startups. I want to say a very big thank you to the Tech Hive team for coming together to put this off with us. And also to say a huge thank you to the panelists for taking out their time to be a part of this. Without them, we would not be here. And without much further ado, I will be introducing the panelists and our moderator for the day. My name is Anthony Chuka Ipundu. I am with Hamuligo. Hamuligo is a law firm based here in Abuja, Nigeria. We have tech at the heart of our practice, and we are very much interested, and we work with lots of startups and tech industries. To introduce the panelists, I will start with Ife Ojobani Kon. Apologies for that. Ife is an investment associate at Microtraction, an early stage investment fund that backs smart and relentlessly resourceful founders who are building high growth, technology-driven businesses in billion-dollar markets. That's quite an impressive profile to have there, Ife. I'm most happy to have you in our midst today. Then the other panelists you should all look out for is Kesiena Majemite. Apologies if I am murdering that name. Kesiena is the founder of SeedCap, an African leading startup studio building digital platform companies for the middle market economy. He has a decade of professional experience working in technology, venture management, and investment industry across the MEA market. He has received professional qualifications in economics, alternative investments, and global business. We are really happy to have you here with us, Kesiena. Then, last but definitely not the least, we have Esther Ndeti. Esther heads investment at UNCAP for over a decade. She has developed a track record in the region's investment and small medium enterprise sector development by being an active champion for entrepreneurial access, a fervent supporter of business leaders, and a connector and builder of the entrepreneurial ecosystem. Prior to this role, Esther was Executive Director at the East African Venture Capital Association, EAVCA. And to introduce our moderator for the day, we'll have Deji from the Tech Hive Advisory Team. Thank you, Deji, for signing up to do this. Really, really happy to work on this with you and your team. Now, over to you, Deji.
Thank you, Anthony. And good morning to all our panelists and our audience as well. Thank you for joining us this morning on our meeting fireside chats. And I believe we're going to have a great time rubbing minds and discussing the opportunities for unlocking funding for startups in Africa. I would like to ask our panelists to please turn on their videos as we begin to interact and take it forward from there. I will start with Kes. Hi, Kes. Good morning.
Hi, Deji. Good morning. Good morning, everyone. Such a pleasure to be amongst you this morning. Looking forward to the conversation.
Yeah, so Kes, I'll start with you. I'd like you to tell us about your startup experience and what you basically do at SeedCap. Tell us exactly about what you do at SeedCap.
So SeedCap, as introduced, is a venture studio. What we do is venture building as a service, venture design, venture operation, and venture management. The core thesis of which SeedCap was founded is based on the idea that as the world evolves, and Africa in particular, most of the required skills and required services would be digital. And there needs to be a middle market for where traditional skills and digital skills come to converge. And for that to happen, we need to build platforms where the offers of these services and the receivers can easily engage without the need of any physical interaction. So the idea is take any kind of business that is very traditional and might not survive in the digital era, and look for talented founders and executives that could build platforms to help those businesses to be sustainable in this part of the world. As an entrepreneur, SIDCAP started because I haven't been through the different ranks of founding companies from, my early years in tech was, building exchange services where people could find services, find companies, what you would call like a yellow pages of, many years ago. And for me, it's always been about exchanging and creating value for people. So that has taken me around the different ranks of entrepreneurship, from raising capital, hiring, building teams, and all the different travails of being an entrepreneur. And looking at all those different areas without even going into the market made me realize that there needs to be someone who is providing this missing middle service, right, for entrepreneurs and for founders who probably do not have, savvy business experiences, or they don't even have the technical experience, but they have an idea that is worth giving attention to, and those ideas are what's coming to life. So my experience from being at those different phases of venture building taught me that someone, and when you look at the market, that was the emergence of the old startup studio model, which is not totally new anyway. But when you look at Nigeria, where we're based, it's something that it's emerging, and across Africa, it's picking up rapidly. So we felt this is the best industry to be able to provide this type of value across board. And I think myself and the team are one of the most suitable teams to go on this enduring mission. So I hope that answers you, Deji.
Yeah, it does. But let me double down a bit. The model you currently adopt, the startup studio, how feasible is it? Like, how has it been your experience in Africa? I guess it's been used in other parts of the continent, more developed parts of the world. How has it been adopting that model in Nigeria at this current time?
So I think the concept of venture building is not new. If you're a founder, if you're an entrepreneur, you're a venture builder. If you've been involved in a startup one way or the other, you are a venture builder. I just think it's the scientific and the methodological approach of bringing the different processes that is required to move from one phase to the other, which you would find in traditional accelerators or incubators that provide the same services to founders one way or the other. But we take a more thorough approach to this by bringing in skilled experts along the way to validate these processes for founders and to ensure that this business is delivering value. So again, the missing middle is assembling those different services together and making sure the right people are doing the right jobs, and the founders can focus on going, on the mission that they choose to embark on. And for Nigeria, I mean, the talent is here. So if you're looking for what are the initial type of, business services that a founder will require, you have various service companies that are offering their services in sort of freelancing models that founders would typically embark or hire in the beginning. So when you don't have the required funding to hire these services, you either have to raise capital one way or the other through debt, family and friend and whatnot. And that process can also be very stalling, especially when you're early in your business. So the type of founder that we get to work with are those who, the idea is good. It needs someone to, take a bet on the idea and help them refine it through that early stage of product validation. And so far, so good. We've seen a lot of founders. Last year, we had, I think earlier this year, we had our maiden edition of the Venture Builders Program. We received over 700 plus applications, narrowed that down to about 10 founders. And so it means that this knowledge is becoming common, that studios offer services that founders would find very useful in the early days of their venture building process. And as well as the flip side is working with corporate organizations as well. So you sort of build out innovation labs, work on new products on the side to help them pursue new business objectives. So it's a mix of finding what really works because it's still very new in this market. We think that the best way to approach this is to separate the different services and offer them as bundles to founders who might need one or two of these different services and trade value from their business to us, or the other way around.
Thank you for that. Thank you for that. So Ife, I'll come to you now. Can you tell us a bit about what you do on Microtraction? Before I like to get a background about what some of the things you do, some of the interesting things you do on Microtraction before I go on.
Sure. For sure. So for context, Microtraction is an early stage investment fund focused in Nigeria. We are headquartered in Nigeria, but we are Pan-African. So far, we have 30-something portfolio companies, majorly Nigerian, but we have a couple in Ghana, Rwanda, and Kenya. So as an investment associate, I am in charge of managing Microtraction's investment process. We have an all year round applications program. Also just reaching out to interesting founders, and seeing how we can get them onto our portfolio. I'm also in charge of portfolio support. So part of that is our network partners program, which sort of goes back to what Kes was talking about earlier. We have sort of built a bouquet of services for our portfolio founders. So think about the first things that founders need when they create a company for the first time: legal advisory, regulatory advisory. They probably would need a software development shop, software quality assurance as well, growth marketing, and related services. We also have the perks and discounts program, which I'm responsible for managing as well, where we have the most common software services, think AWS, DigitalOcean, and co. Just to make sure that our founders don't have to spend money initially on certain things and expand their runway as much as they can. What else? We also have the Venture Scouts program, and this is one way we are trying to really make ourselves Pan-African. So because I and the rest of the team are majorly based in Nigeria, we need people that are boots on the ground in South Africa, for example, East Africa, other regions in West Africa. So we have a Venture Scout that is based in Francophone Africa, and he will know what is happening in Côte d'Ivoire, in Togo, versus Ife that can't even speak French, past Joe Mapel, you understand? So yeah, just making sure our portfolio founders are as comfortable as possible and looking for the smartest founders to join Microtraction portfolio. That's summary of what I do.
Oh, nice. So would you say your work involves more of working directly with the founders? How has that been in terms of building relationships and trust, and also helping them scale their business? How has that been, working directly with founders? Because even in my own experience as a consultant, I've had a lot of butted experiences with certain founders over time, and it can be a bit difficult. So I just want to know, how's been your experience working directly with founders, especially early teams to start with? Do you have issues with founding teams and partners and co-founders? How's it been?
Not at all. I certainly understand where you're coming from, but early on, I think just because of where the company is, it's easier for you to build a friendship that is past investor-investee. Both, as long as both parties realize our aim is to make sure that this company succeeds, everybody is automatically on the same page. I like to think that I am friends with more than 50% of our founders, friends. But whenever we message each other, definitely you're going to get a response. So if you get a response from me in under 24 hours and vice versa, we are definitely friends. It's been fun. I think part of the satisfaction just comes from, oh, Ife, we need your help with XYZ, and you're actually able to help them and sort out something that they thought was, going to be a huge problem. That's where I derive most of the satisfaction from.
Oh, that's good. Esther, I really want to hear about your East African perspective. I believe it's going to be a very rich one. I'd like to know exactly you're working with UNCAP now. I'm hoping I pronounce it right. What's your investment process like? Yeah. And what do you guys double down on right now, generally speaking?
So I was really enjoying Ife's introduction and really how she's speaking about the work they're doing at Microtraction, because essentially what we're doing at ANCAP is what Microtraction is doing, but at scale. So I don't have the liberty or the pleasure to make friends with our entrepreneurs. Right now we are, because we have 27 businesses in our portfolio, but then we're looking to scale up our investments rapidly across over the next few years. So looking to do 100 before the end of this year and 1,000 next year going on. So let me tell you a bit about ANCAP. So ANCAP, what we call ourselves, is a funding platform where we're trying to revolutionize early stage investing. At the core of what we do, we believe that every good founder across Africa needs access to capital, early stage capital. If you look at sort of like the funding gaps, you'll find that we have a tranche of investors on this continent who are doing ticket sizes of $200,000. There's a bunch of them there, and then there's a bulk that sits over the $1 million mark. So early stage businesses come in and they don't have access to that very initial pre-seed seed capital. They are too risky for traditional lenders. They have zero assets, zero collateral. We do not have that, cushion where you're able to go back to your, friends and family. Not enough of entrepreneurs have that, where they're able to sort of like raise from their friends and family, their initial capital raise. And at the same time, they're too big for MFIs. So we are trying to sit in that space there where we provide ticket sizes of $10,000 to $50,000 to the early stage entrepreneurs to just get them through the initial value of debt. But then we're trying to do this at scale. So we have a lot of automated processes, right from selection and generation of pipeline as well. So when she's talking about venture scout programs, our equivalent of that is partnering with accelerators and various business groups across the continent as opposed to individuals, because we're trying to get as many businesses into our pipeline as possible. And then we've built algorithms into our system that help us be able to assess the applications. So because the businesses are really early stage, if you talk to any early stage investor, they'll tell you that the focus is really on the founder. So you're investing in the founder as opposed to the product. So algorithms are focused on assessing entrepreneurial potential, lots of personality tests and various things that we've been able to design over the past 2 years to be able to sort of assess and be able to figure out who can qualify for our funding. The other thing that's unique about ANCAP is that we do not sit in the straight debt or pure equity. We sit in the middle where we're revenue-based financing these businesses. So we do buy equity into your business, but essentially you're buying back your equity as you make your repayments on a monthly basis of your revenue. So this is not MFI style. This means that if your revenue is going up and you're doing well, you're able to make your payments, but then we're also patient enough when things are really bad, like the 27 businesses I mentioned, we did 24 of those deals 2 weeks before COVID hit. So you can imagine what happens to a big bulk of our businesses. But then we're in it for the long run. Our investment period is up to 10 years. So, for those, a bulk of those will probably be able to pay back or divest before, half that run. Some are even on track to finish in 3 years. But then we're not punitive to those that need that patient capital to sit with them for a long run. So that's a bit about ANCAP, and I'm happy to keep talking about it as we keep going on.
Oh, thank you. Now, the two things I want to pick on from what you said, you said you have an algorithm-based model, right? So I've been reading a lot about algorithms and AI, yes, and I know sometimes it can be quite biased, right? So in terms of your portfolio, would you say it isn't biased against female-led startups? Because I know there's a lacuna in that respect, right? And you find out that most of the startups that get funded are usually mostly male-led, right? And there's a huge gap that people are beginning to try to address these days. So what would you say your organization is doing in that respect? Given that it's an algorithm-based model, how do you try to ensure to avoid bias, right? and also begin to focus on the female-led startups who actually need this funding as well?
Absolutely. And within that question lies your answer. So we have been extremely cognizant of the biases that have happened on this continent over the past few decades, right? And with regards to investing. So, as we're working on the algorithm, and the thing about algorithms that it gets improved as we put more data and more information in it and as time goes by. But then we already put in markers for ensuring that we're removing barriers with regards to biases on women-led businesses. So this looks, if you look at the things that would lock them out from funding initially were things around the business model, the scalability of it because of the kind of business model and industries that they work in. So we're not looking for high tech, high growth businesses. We're open to, a broader range of businesses. So not the 10Xs, the 2 or 3Xs for us are good, organically growing businesses. We're not looking for pitch decks and things. So we've taken out some of the barriers that were essentially in there for these women-led businesses, but not just women-led businesses. So even the barriers against local founders, we have a huge focus on local founders across the continent. We have a huge focus on women. So just essentially making sure that our algorithm is picking out these things that are traditionally barriers across for these marginalized groups, and then hoping that as time goes by, we're able to improve on this and ensure that we're keeping that funnel really, wide and attracting as many different entrepreneurs as possible.
Yeah, okay. That makes a lot of sense. Yeah. So on the issue of the funding of the transactions you closed before COVID, how has it been post-COVID in this period of time? Are you more hesitant in terms of releasing capital to these founders now, or even more cautious based on what's happening in the market realities with COVID at this current time?
No, actually, what we've done is we've learned what are the things that we should be looking out for in terms of businesses and what resilience looks like. So within our portfolio, we've really learned what resilience really means. We've also learned what iterations need to be done with regards to very specific sectors and different types of business models. And then again, like I said, we're long-term investors. So, just knowing that this is probably 1 year that was a complete outlier in terms of how it performed in the business sense, but knowing that we're in with them for a longer run and actually building on and figuring out how we can also support them with follow-on funding and various other support resources. So it has been a learning journey. That is sort of like what the most I can say about this. We've also had some businesses that completely grew over the past year, unexpectedly. Various needs from society came up during the lockdowns and various other things, and these businesses stepped in at the right time, and they significantly grew. So we have a good balance in terms of some that completely went down and are working to sort of help them revive their businesses, and we're partnering. So one of the things UNCAP does is, unlike Microtraction, and I think Kesiana, who talked about how they work with businesses one-on-one, being able to figure out what services they need and providing that service, is that we partner up with service providers across the different countries, across the different sectors. And so just being able to figure out how we could expand that and bring in the right, is it, are your issues around sales, or is it around, the technology or whatever it is. So we have a really robust and growing group of partners who help our businesses be able to figure out their issues and grow.
Tess, how do you identify these startups and founders that you work with? Is there a certain process or algorithm used to identify them?
No, actually, we do not use any algorithm yet, but I think it's based on the market's needs and really the impacts that the solution that the founders really bring into markets, and how we can see what obviously the market economics that can unlock, both in capital and in terms of revenue back for investors. But generally speaking, we look at it from an holistic point of view of how much impact can this business make, and that impact is in revenue and other opportunities that that business is able to deliver when it becomes successful.
Do you have any sectors you focus on more, or are you sector agnostic, generally speaking?
We're kind of sector agnostic, but I think we have priority more for, anything within the gig economy, anything within exchange of service. So you would find us around marketplace-based businesses. So any business that is able to create a new market where there's exchange happening. So any form of marketplace, either as a platform, SaaS, whatever it is, but as long as there is the ability for people to converge within the platform to exchange service, we probably would give priority to that. And this is industry agnostic.
Okay. Has the current market realities, given COVID and all, has it affected your business model in terms of what you do, or have you doubled down on what you're doing? Do you think there are more opportunities with these startups, given the situation of things right now, as it's been from last year up to this point?
Definitely, I think for every business that is within and across every industry, COVID, one way or the other, had some sort of impact. I think for us, it's obviously portfolio companies, running into different, liquidity challenges and all of that, and being maybe able to provide runway for them. During the period of the outbreak and the lockdown, there was need to re-strategize. And at the same time, there were portfolios that were doing better, perhaps in the logistics space and whatnot. So I think COVID had its impact, but it didn't change the underlying philosophy of what we do. Again, as Ife had mentioned, and I think Esther, it's really about finding the best way to work with founders to ensure that they can deliver on the mission. For us, as a studio and as also investors early, the goal is to see that the value that we provide is bringing out return, at the end of the tunnel. And it's to help shape all of that with the right support, with the right partnership and everything that, would help that business along the way, because we're co-founders, the way we see ourselves, we're equally vested in the business. So we do not look at it from a change in business model, because the business model is very much useful today, even very much so, because now there are a lot of people out there who need, some sort of opportunity to build new products. And they do not have access to capital, they do not have the network, they don't have all of those resources. And the philosophy for us is that the monopoly over success should not be capped by your access to funding or to people that I think every idea needs to have a kind of equal runway. So the studio is really where you come to get that resources to get going till the right VC comes along, or the right investment team comes along to take interest in the business. And we also help you through that process and finding who the right investor, who the right lead would be, and just to ensure that the founder does not give up on that mission, especially when there is a need for what they're doing.
Okay. Ife, how do you identify viable ventures of microtraction? You did a routine work here. How do you identify what exactly catches your eye? Exactly, what do you look out for? Do you look at the revenue at times, depending on the stage they're in? Do you look at the attraction or the impact that they could have eventually down the line? Or are you particularly sometimes biased to a particular kind of story or something like that, or a kind of founder?
Bias, I would say, I don't think bias plays a role. If we're going to be biased, it's towards the team. At the end of the day, you need to have 100% resolute confidence that the founder can carry that company all the way through. So you're looking for experienced founders, subject matter experts that you're sure know what they're doing. I've had real-time experiences in these industries. For example, I cannot wake up one morning and decide I'm starting a crypto startup. You understand? What crypto company have you worked at before? What's your crypto portfolio like? What experience do you have managing crypto? Do people regard you as a subject matter expert? Nobody should take me seriously if tomorrow I just wake up out of the blues and say, I'm creating a crypto startup, you understand? So there should be, I think, historic data that points to that founder's knowledge or expertise in that field. Especially if you're a Nigerian founder, grit is also something that is very important. And I think Esther mentioned this earlier. You need to, especially in Nigeria, where regulators just drop TGIF packages for you sometimes, right? You need to be sure that one policy will not wipe out the entire company. So you just need folks that it feels, and I've seen 1 or 2 companies like that, even within our portfolio. It feels like when there's a policy that seems to negate everything that they are doing, their work ethic just times 200. And the next week they're out with, okay, this is how we're doing this. This is the new process for this. And it's just founders like that that make you and keep you confident that, okay, these guys will be okay. This may be happening now. COVID may be doing this, may have this impact on their business now. This policy may be doing this now, but these guys will be okay in the end. I think for us, it's very important that you have at least an MVP because we don't invest in idea stage businesses. We need to see that the founders have skin in the game. So while we are not big on revenue, we have invested in pre-revenue startups before. We just need to see how the founding team is thinking about generating revenue. What's the journey to 10K in revenue going to be like in $100, 1K? There needs to be a clear-cut plan for that. How are you thinking about customer acquisition? What smart distribution plays do you have set out? Are you smartly leveraging partnerships, or do you just want to go in alone? You know, especially if you're a fintech product where all fintechs or all financial institutions are practically sharing the same customer base, right? What smart ways are you thinking of making sure that you guys are far ahead early on? I think those are the key things. You just want to see that the founders know what they're doing, to be honest. I think 70% of the bet is on the founding team. If you seek out references, you check experience, and there's that reputation in the ecosystem, that's definitely where the bias lies, if there's going to be any bias.
Okay. You said founding teams, right? From your experience as working in microtraction, what would you say has been the key in a founding team being that kind of team that you want to invest in, right? What qualities beyond the grades, obviously, given the regular TGIF that you mentioned that we get every now and then?
Yeah.
What other thing would you say you would like to see in founding teams beyond the founding teams that makes yes, microtraction will probably consider these guys?
Okay. Okay, so for example, we prefer teams versus a solo founder. Building a company is hard. It's very hard. I am not a founder, but even I feel that pressure sometimes. So it's important that you have co-founders that are sold on that vision as you are. Also important that you have at least one technical person that can manage engineering and product management. So if you see many maybe tech-focused VCs investing in a solo founder, it's probably that person is CEO and CTO. Especially for companies that write really small check sizes. Say, for example, we write 25K. So if you are onboarding a really expensive dev shop from the get-go, it becomes an issue because you're probably paying them maybe $20,000 per month. How much is our 25K going to take you? You understand? So we need to make sure that there's one person that is in charge of the code. Because also employing folks that aren't co-founders early on could also prove to be an issue. I've seen cases where the stack that tech team wants to create your product in is something that you cannot find the talent in Nigeria, or they would be really expensive. I guess it's a way of creating a moat so that you don't, lock them out one day. But at the end of the day, it may not be in the best interest of the business early on. So yeah, it's definitely a technical co-founder, a business person, because fundraising can be a full-time job too. So you need once one person is focused on fundraising, at least one person should be neck deep in the product and make sure that something's being built.
Thanks for that. Something about all the three speakers currently is you guys take bets on early stage stage startups, which is actually good. Yeah, it's I think it's something that's where you find the most value at the end of the day, when you back founders early on before they become high growth startups and the numbers begin to grow out into the wild. Esther, on the East African perspective, where what would you say? What sectors do you think have the most funding needs, right? And also at the same time, I'd like to ask: does UNCAP invest in West African startups as well? Do they, or do you also look that way as well?
Do you mind just asking the first question again? What was that?
Yeah, no, the first one is based on the East African sphere, right? What would you say are the sectors that are attracting the most fundraising needs in your organization? And also, do you guys also, do the folks at UNCAP also look towards funding startups in West Africa?
Okay, so I'll start by answering your second question. So at UNCAP, we have 4 countries of focus at this point, but then this is going to grow up as we continue scaling across the continent. So currently we are focused on Kenya, Uganda, Rwanda, and Nigeria. So I guess that's a partial yes in terms of West Africa, right? But then we'll be looking to scale into more countries, both in East and West Africa over the next few years. With regards to sectors being invested in, I think the fun thing is that I keep a track of deals across the continent. And this is, this is something I adopted from my previous role. I just like to know what sectors are of interest, what changes, and what's not changing. So I think what I'll talk about really is across the continent as opposed to just in East Africa. But yeah. What's not changing is that fintech continues to be the leading sector. For whatever reason, I think financial inclusion is a big thing. Just the potential there continues to drive a lot of investments on this continent. And I think just when they look at the upside and the potential of it, I think it just continues to be very, very attractive to investors. But then what we're seeing is that it's moving away from just lending and payments, which was what was a big, sort of like the big micro sectors within fintech. And now we're seeing more, on around crowdfunding, digital banking as well, which is, I think, very interesting for me as a solution for various startups across the continent. We're seeing, and I had Ife talk about this, we're seeing cryptocurrency platforms cropping up, exchange platforms cropping up as well. I'm keeping an eye on the regulatory space for this to see how this actually pans out in the future. So there's a lot happening within fintech, and actually that takes up to 35% of the deals that have happened across the continent between January and today. And then the other big ones would be, and this is obviously given the way 2020 panned out, we see healthcare as a sector that is really picking up in terms of deals. It's well, in comparison to fintech, it's only maybe 10% of the deals we've seen so far, but still, I think moving from what it was previously, this is a good, a significant growth. So within healthcare, we're seeing, med tech and e-health solutions. We're seeing digital counseling, telemed, telepharmacy. So yes, I think healthcare, there's a lot happening there. I think COVID really showed us that there was a need to be able to access healthcare regardless of, demographic or location, and there are solutions that needed to be developed and funded. Then also seeing ag and food, definitely again, I'm happy to see more happening in the ag space and not just ag tech. We're seeing even brick and mortar solutions being invested in, things in, solutions for cold storage, various solutions right from the farmer to the restaurant in terms of tech, but also in hardware as well. So, those three for me have been interesting. Oh, also energy as well. Continue to see solar really, leading the charge on this one and attracting, capital on this in terms of
solutions for energy across the continent. Just last 2 weeks ago, speaking about the energy needs on this continent as the continent, as the population continues to grow and that the gap gets bigger and bigger, the funding gap gets even more. I think we talked about something like $1.6 trillion needed in the renewable energy space. So, just seeing these clean tech solutions get funding, has been really interesting, and not just cook stoves, right, which had been really dominating the clean energy sector for a while, but various solutions that are actually, across bar. And then lastly, maybe it's just services. I think it was Kessie who talked about this when he was talking about marketplaces and SaaS and e-commerce and digital ads solutions and all of this. This is really picking up, and and we're seeing a lot of investments in that space as well.
Okay, thank you. I'll come back to you shortly. Kes, while dealing with these startup founders, something Ife said is still ringing in my head. Have you had regulatory, conflicts and brushes in the startups you deal with?
So yes,
do you deal with some regulatory challenges or TGIF, like Ife said? Have you had such experiences while working with your portfolio companies?
So portfolio companies directly, no, just because of the type of ventures that we choose to work with. But obviously, because my role is also to support different founders within the ecosystem. So I've been exposed to this type of situations where founders have to deal with regulatory challenges. I do think that, as Ife rightly mentioned, nobody plans, and sometimes it's this TGIF kind of thing. So in most cases, obviously, you need the right type of legal advice by your side to be able to navigate and respond to this. I think the first thing is to respond and acknowledge the situation. But directly from our portfolio, no, we've not had any of such situation. But yeah, we're also keeping abreast of the changes that obviously happen, and that's what part of the service is, which is sending this regular update on different type of compliance issues that a portfolio might run into, and getting the advice from the expert on how to manage that properly.
Okay, would you say like now in the Nigerian landscape, for example, that the regulatory clashes and conflicts are affecting investment and funding to certain startups or to the startup ecosystem generally? Would you say that's the case? I will bring it to Ife as well, but would you say that given the way the regulatory space is quite tense, right? Particularly in the payment and financial services sector, would you say it is having a negative effect on the chances of certain founders getting funding and investment?
I think it comes down to experience, right? Especially because, for the type of industry like fintech space, you would understand some of these regulations. Some outrightly don't make sense, not just because I'm against any form of regulation, but because for an early stage company that does not have the resources or the bandwidth to meet all of this regulatory compliance as they come into play, like, within short notice, that could really stall the focus. But then because of one of the requirements of being an entrepreneur and a founder is you're going to face challenges along the way until, you get the, customer approval rating or the market approval rating, as I tend to think of it. You're struggling to build legitimacy, and regulators are somewhat the agents of those type of things. So the way I see it is, as an experienced VC or an experienced investor who is coming into any market, obviously one of the biggest things to consider is the regulatory risk. Some of them, you can navigate them with the right legal advice. Some of them, it's just a matter of time, for you to dialogue and sort of like have a stakeholder meeting with the, regulator. And I know that some people within the ecosystem are focused on that with the different startup initiatives that are coming up. So for me, personally, I do think that every new market or every emerging market, because of how fast technology is moving into different sectors, we're sort of catching up with the pace of technology. And ultimately, technology, in my opinion, would win in a lot of ways just because it makes the life of people easier. And dogmatic founders and those founders who know what they're doing, who have the right experience and the right advice, and as well the type of investor that have the appetite for those types of sectors, would have to find a common ground in navigating those challenges. And I think that's why it's great to have the right type of investors as well, who understand the complexity of innovation and breaking new markets, like Nigeria, for example. So because I have not directly dealt with any situation where that has been an issue, but I know that if it's very, very complex regulatory issue, I mean, if you're trying to break into a sector with a high barrier of entry at a very small company, for an early stage investment firm or for an early stage investor, that might not be attractive because the cost of just making that investment is going to be high in the long run. And you can see the startup dying from this sort of chokehold from regulators. So you might want to stay away from that. And that's just, common sense from you investing people's money. But I think if it's in an industry where, you can walk around this, it's still very early. And I know some of these regulators create this sandbox environment for fintech to test ideas and whatnot. So I think there is that dialogue that is happening. And I think it's going to continue to happen if innovation must prevail in a country like Nigeria. And that's how I see that. But I've not been exposed to a particular case of an investor refusing to invest because of, I'm sure that's part of the due diligence process an investor will go through before even committing. So most of the time, you find out that you're either talking to an investor that's interested in that sector just because of the regulatory issue, or you're talking to an investor that is interested and willing to work with you because they have the resources or the partnership network to help the founder to get through that. So it's really different dynamics that comes to play here, but I can't say. I think maybe Esther will be able to comment because they do investments, and I'm sure they've been, very exposed to this dynamics, and I'm sure even if they might be able to comment on that more accurately.
All right, thank you for that. I just have to ask another thing before I move to Esther and Ife, right? So in terms of your business process, right, what would you call your ideal startup lifecycle process in terms of, okay, they come in, you double down with them, you begin to work with them. How exactly, what would you say is the most ideal case for you from what you've seen so far in the business?
So for us, our process is built around the concept of an assembly line. So we call it the startup assembly line. And because we're operators whose goal is to help this business move from one sort of stage gate to the other. And the traditional life cycle of the business is, you founding the company, founding the team, doing all of those venture building initial stage processes, venture design, and moving that business along to some sort of metrics that you use in validating if this is what's, even committing extra resources into. And so that process for us would go through typically a 3 to 6 month process between venture design and just getting the business to go to market, right? And between that period, there are some key objectives that are agreed between us and the founders to say this is what we want, or this is the goals that would ensure the continuity of this business should we be supporting the founder. And this is based on pure, it's not sentiment driven, it's not biased in any form, it's just market dynamics to ensure that we're not wasting the resources where it could be useful to other founders or other projects. But if a business moves very successfully from, validation and there's initial traction and it's growing and there's a case to present this into a proper funding round, and that's one pathway. The other pathway could be the pathway of you already have your MVP, you've built something, you just need someone to provide some other business support services like the PECs that Ife had mentioned just to collapse your runway while you bootstrap till you find the right market fit or something. Those are also pathways, but for us, it would go through providing venture building services, venture operation services, and sort of venture management services. And all of these are at different stages of the business life cycle at the initial stage, because if you've not formed a company, or your cap table is not structured properly, all of those different headaches that even experienced technical founders don't even have. And what I mean is, you could be very technical, you could have industry experience, but you don't have the business acumen to know what is the right process to doing getting this done. We are able to provide those sort of advisors and people who've done this before, and just help you to see it from that perspective of, this is how you can go about the business. So in 3 simple ways, it's usually building, operating, and sort of management, with those little sub-services and activities that would go into each of those segments or stages of the business.
Oh, thank you for that. Usually, when do you get off the train in your business process? When do you think you get off the train at any round? Is there a particular round you guys prefer to get off the train at?
So typically, we would love, obviously, to get off as early as possible, not from back in the business. Of course, like, there's continuous support and working with the founder, and it becomes like a friendship, if you will. But the goal is to be able to free up resources to ensure that more founders are being supported part-time. And this can go from as little as 6 months to 18-month window. But obviously, for us, the spin-off stage would be when there is a significant seed round that is able to help the company to form their full team, and sort of like ease out our venture building team to focus on other founders. So yes, and for internally built companies, it depends. If we're working with a corporate to form a new business, I'm sure we'll be on that for as long as possible till we think the value of our investment should be redeemed.
All right, thank you very much. Ife, I'll come over to you. Ife, are you there?
Yes, I am.
Okay. Just mentioned a few things that I think I'd like you to just quickly touch on as well. That includes, do you guys look at cap tables, particularly? Do you have a strong follow cap tables when investing? When do you prefer to get off the train? Not get off, in terms of, but it's still a business at the end of the day. And also, how have regulatory clashes maybe affected your investments, or did it affect your investments in certain portfolio companies?
The last part of the third question, please.
Yeah,
how does regulation affect? Okay.
No, as in the regulatory clashes, how do you, your business, have you had any experience in dealing with that, like in terms of your portfolio companies, and how have you helped manage it with a portfolio company? Okay.
A few times, yes. And what we prefer to do is just link, because as part of our network partners, we have a couple of legal firms and a regulatory advisory firm. So usually we'll just link both, or if they already have access to each other, just to discuss the best way forward. But like what Kes said, it's important to acknowledge that, okay, we have received this, and yes, what are next steps from here? On cap tables, we are usually the first institutional, what's it called now? Investor. Yes. So usually you just have the co-founders and then maybe microtraction on the cap table. So we come in really early. I know there's a third question that I can't seem to remember now.
Usually when in your business process, when is the best time for you to maybe get on the train partial?
Meaning exit our investments in the company.
Yes, exactly.
We haven't exited any so far. So I guess it's when both parties just come to an agreement, right? So if the portfolio company is about to do a new round, MT, they'll probably come and ask, MT, are you interested? And if it's just a right fit at the time, why not?
Okay.
But on day-to-day support, it just depends on what the portfolio company is looking for. Of course, early on, you're probably communicating way more often. They need you on so many things, but just as they begin to build their wings, they can fly, and they really, if ever, need you for anything.
Okay. Esther, what are the red flags you've come to witness or see in terms of certain founders or founding teams that require funding from ONCAP? What are some of the red flags that you've noticed? I ask this question for the benefit of some people in the audience who probably want to approach organizations like yours for possible early stage investments. What are the things that you always look out for to avoid when selecting those startups?
Well, I think the first one sounds very obvious, but you'll be surprised just how many entities reach out for investment and have not legally registered their business. So that is, and that is sort of like the nature of an early stage business, So, or if they are registered, but are registered as they're just a business name really, and don't seem to understand or comprehend that it is actually imperative that you are a legally registered entity and one that we could buy shares from. And then really just understanding that many early stage entrepreneurs really just need to be walked through that entire process, and they need to figure out how to just formalize their business as well. And which goes back to regulatory aspect as well. One of the things, even at my previous role would push for is just for, this whole admin and regulatory procedures for businesses to set up to be a bit more easy and flexible for businesses as well, just to be able to get them through that hurdle. Then the other thing is just simple financial management and simple, even financial management is stretching it. It's simple bookkeeping, so asking for management accounts or just, some simple financial statements that show your, income or P&L or, cash flows as well, which just, the thing is, we're not looking to see big numbers on these statements. We're looking to see that you understand how your business is running, because essentially understanding your finances is understanding where your business is at any given point or time. So these sound like extremely basic things, but you'd be quite surprised how many businesses we come across, and we have to put aside, and tell them, come back to us when this is in place. Or have teams without proper contracts. So you don't have employee contracts and things like that. And this is just the basics. We're not even going into the technology. We're not going into the product. We're not going into, So, so I think, I'd be, this is why I was saying that, it's important for us to build pipeline from programs, even by venture builders, who are already sort of like figuring these things out and helping business jump that part and focus on building, good companies out here. So, and that's just the nature of being a really early stage investor. You come and, get the really basic red flags from the ground.
Okay, thank you for that. Ife, how about you? The red flags?
So a couple of the things that Esther has mentioned are things that we see and try to support the company through. So not being legally registered, that's a very interesting point. We see that really often. So, because many times we meet founders, probably the engineer or the tech lead when he's building the product, and because of that, all of the focus is just on making sure there's a product, right? Nobody's actually formalizing stuff or legalizing stuff. So what we try to do in those instances is connect them to any of our incorporation partners or our legal partners, just to help them run through registration processes, because we're not going to wire money to your personal account, right? So it's important that you have that entity set up, whether it's the Nigerian one, the US one. There are sort of partners that can handle you through all those processes. Red flags. I don't think we have seen anything super crazy I really don't think we've seen anything super crazy. But the craziest story I have heard from a friend was that they invested in a company and the founder relocated to Canada. And I have no idea how you can guard against that. If there's a registered company and the founder seems, 100% knows the stuff, I really don't know how you can guard. I guess you just weigh these options and determined Nigeria is not it for me, I'm gone. So yeah, investors definitely see things like that in the ecosystem, but I don't think we've seen a case that's such an outlier. The founder will probably ghost us later. So maybe IC has agreed to an investment, right? And we're good to go. And maybe they get what they deem a better offer. I would assume that's what happened. They can just decide all of a sudden that they are no longer interested, which I guess is fine. So no huge red flags on this end.
Okay. I'm sorry, you have your hand raised.
No, it's just because Ife was talking and I completely, I understand what she's saying, but also for us is because during the application process, we need all co-founders to go through the various steps in the application process. And that's when we've seen, people who are originally listed as co-founders having to drop out somewhere in the middle. And then suddenly the main founder saying, no, this is not a co-founder with us anymore. And, if an application process can make you drop a co-founder, for us, that's a red flag. So it's just a different iteration of what Ife was talking about.
Okay.
Definitely agree with that. Definitely.
Thank you. To the audience, I think we're open to take questions. You will drop the question in the Q&A box while we go ahead. I think the questions that are there currently have been answered. I mixed it with conversations with the panelists so far. But I know one question that came up now was, what's the best way to reach out to the panelists? I think that's something the panelists would probably answer that. If they want to be reached out to, maybe emails or LinkedIn or Twitter handles.
Yes, LinkedIn for me, please.
So you could probably drop it in the chat box before we do finish. Kies, I think I have one more question for you. Are you there?
Yes, I'm with you, Dave.
I know it's something that we've had in previous conversations. Like, I want to know what alternative sources of funding do you think startup founders, early stage startups could explore beyond the regular VC or the regular VC route?
Let me see. So I think first and first would be, before seeking out funding, I think it's very important to understand the purpose of why you're raising capital, right? And this is also going to be determined by the stage where the business is at, even if it's early stage, right? Is it pre-product? Is it MVP? And is it even generating revenue as it is? And again, the use of fund is also very important. Like, I think it was Ife that mentioned that if you have a dev shop that is taking $20K a month from your runway, you also don't want to start just raising that type of instruments when there is no revenue or whatnot. So, but if you want to look at it holistically, obviously there are crowdfunding platforms now where you could issue crowd notes, and so you could raise money from people who find interest in what you're building early on several platforms, internationally or locally. I also do think that very early on, really, it's also a trend that we see in corporate venture capital, where early stage companies could try to align with a corporate VC if they're solving a very specific problem within that industry. So, like, I think I started mentioning the health tech space. So again, it depends on stage, the need, but right off my head, I think corporate VC seems to be a route for any startup that's, especially those that are building solutions that are, capital intensive, when the cost of MVP requires sort of like regulatory, bottlenecks, and the best way to go through is to work with a corporation that already has these resources that you can leverage, and then they are sort of like early buyers into your product. And CrowdNote seems to be a very useful option these days. And I think other means are there, but they are one way or the other a mix of the existing instruments that you unlock from different network that you might have, from traditional grants and all of that.
Okay. Yeah, thank you very much for that. Yes, thank you very much. We have a question in the box there. I'm not sure whether it's Ife or Esther. I'd like to take this. The question is, what's the plan for social enterprise startups, and what do you look out for differently? Esther, do you want to take that? Or Esther, can you hear me?
No, I think maybe Ife should take this one.
Okay. Ife, how are you?
On this end, it's not something that we have previously invested in, but if the person believes that they already have something built out, they can just apply via our website.
Oh, okay.
Yeah, and pardon me, please, our investment criteria is publicly available, so they can just take a look at that to see if it will be a great fit.
Oh, okay.
Why I was handing this over to Ife is because if you remember, I mentioned earlier, we're not looking for high tech, high growth, and you'll find that social enterprises fall under that. So, slow, organic growing businesses. So they fit within our criteria. So there's no special sort of like lens for them. I feel like that we're already targeting them by how we're originally set up.
Okay. How have you, since you've been on CAP, I want to know, how have you found the regulatory space, particularly in West Africa, the Nigerian, if you have been involved directly with any Nigerian investment, how have you found the regulatory space? Have you had any issues or challenges?
Fortunately, not yet, but I do keep an eye on the news. And for me, I think it's really the regulatory scene in Nigeria, I think, is representative of most of the continent. It's not unique to Nigeria, where you have, policies that, come up or crop up overnight. In my previous role, the biggest part of my responsibility was watching regulations and policies across East Africa. And so for me, this is new. And my even as we talk about how to, these specific changes in policy that affect startups, for me, it's really a question around how do you create an enabling regulatory environment that benefits both investors and startups. So, when you have these new burdensome regulations that impact small businesses, who's speaking on behalf of these startups? So in East Africa, we have the EAVCA, we have the Kenya Private Sector Alliance, and what I see that Nigeria as a startup act that is being developed is this meeting the needs or the voices of the startups on the ground there. Those are things that I'm trying to see and understand, and maybe actually you have more to say about this for me to understand better. But also what I'd be looking to see is concessions for startups and for those that are investing in startups as well. So are there incentives out there to attract more capital, or are there incentives to unlock local capital so we can see more investments, more diverse investments happening in these different markets? So I look at it from a more wider angle, of course, sector specific and business specific, but also those regulations that are either, unlocking or mobilizing more capital.
Oh yeah, thank you. Yes, there is a startup bill being proposed. It's not, I don't think it's been brought before the legislative bodies yet, but I know the private sector, individuals in the ecosystem are all they're organizing to create a body of work that can actually benefit startups and the players, both the angels and the investors in general. And I think the idea behind that basically is to be able to offer some sort of succor protection for investment that does come into the country, and also to help attract these investments and we can continue to grow the ecosystem and grow the economy as well. So that's still ongoing, right? It's not yet done and it's not yet passed, but we do hope that as the time goes by, it is actually passing to law and can actually be, and is implemented to do what it set out to do. Ife, are you bullish on startups in Africa and Nigeria currently? Are you bullish, given, like you mentioned, building a startup is hard, and I know how hard it can be. I'm sure you also do. So are you bullish on continue to back them early on and from what you've seen so far?
Definitely.
Even with all the wahala that's around.
Oh yes, I believe that Nigerians are, and it's not just the startup ecosystem. Being a Nigerian is hard most days. Nigerians are forced to be resilient, right? I have no doubt that there are resilient founders in the ecosystem that will continue to find a way, regardless of what is thrown at them. I've also seen, which is really encouraging, I've also seen this trend where founders keep building for, now there's a focus on LATAM in some instances, and some other climes that are friendlier with regulations, right? So folks aren't just building for Nigeria. They may be Nigerian, but they aren't putting all their eggs in that one basket anymore. So that's really encouraging.
So they're building for the world, though they are
Exactly. So.
Yeah. Or building for Canada so that they can actually go to Canada.
There's that.
There's that. Yeah. Oh yeah, thank you for that. Kessia, I think we give each speaker a minute to just give closing remarks as we come to the end of the session. Kes, do you have any final words?
Yeah, hi, thank you so much, Deji, and thanks to the organizing team for this. I think what's important is, for me, these conversations are very important, especially because the need to consistently and get more knowledge about the venture building challenges and startup the challenges that founders face to the forefront, so that the key stakeholders can better understand these challenges from different perspectives is very important. And what I think we're about at SIDCAP really is that it's important that some people step in to do the job that is required for what Nigeria of tomorrow and Africa of tomorrow would look like, to start today, because again, there are a lot of young minds, talent, and very resilient Nigerians and Africans in general out there that they're just looking for the opportunity to create something to give their life meaning, give their community meaning. And I think it's important that, they get platforms, right, that helps them to unlock this vision. And if myself, Esther, and Ife continue to, provide this sort of like support across, our different organizations at different levels, I think one of the interesting things I've seen in the venture space is, as much as sometimes it is, competition for deal flow, in the sense that you're looking for the best deals to ensure that you're deploying your capital more accurately. But the general sense of it is to enable, founders get a fair chance to build out their dreams, build out something that, unlocks value for the community and for the society. And it would be great to see that sort of, openness and environment from the regulatory side, from the different key stakeholders, to ensure that we're able to achieve this objective together. So for me, it's always interesting to be part of these conversations where we get to share and transfer knowledge from what we're doing individually, but collectively to strengthen the ecosystem. I think that's it for me, and I'm very happy to have shared my morning with meet with everyone on the call as well as the panelists. Thank you very much.
Thank you, Jess. Esther, how about you?
No, I think first just to say a huge thank you to the team for inviting me. Really, you know, I'm really grateful to be able to sort of like have an audience that's sitting on the other side of the continent, which has been our goal anyway, as we try to penetrate Nigeria as one of our key countries. But then, you know, hopefully, you know, this conversation does not stop here. You know, that's one of the things I push for. I don't want to participate in any talk shops. I want that, you know, Tech Hive and Hamu continue to reach out to UNCAP and find ways we can work together. And not just us, but also Microtraction and Kessie as well. You know, I feel like there's ways we could work together to just ensure that we are supporting early stage businesses and taking them to the next level and, you know, just building our continent at large. So, you know, I shared my LinkedIn, please reach out, you know, and let's build startups and let's build big businesses that cut across markets and revolutionize early stage funding. Thank you.
Thank you. Ife, how about you?
Thank you, Tech Hive Advisory and Legal for putting this together. I think I just want to give a word of encouragement to the founders. Keep building. We know it is hard, but keep building. If you would like to reach out, I've also sent in my LinkedIn profile. Please send me a message there and we can just pick up conversations. If you fit into our investment criteria, please apply via our website, and definitely keen to partner with Kes and Esther and just see ways that we can collaborate and further bolster the tech ecosystem. Thank you so much, guys.
Awesome. Thank you all. I'd like to say thank you to Kes, Ife, Esther. Thank you all for sharing your knowledge, for taking your time to come here and have these conversations. And this is the first of many to come, yes. And I also believe in the power of collaboration across all spheres. And you know, I also believe in having a Pan-African perspective to things. So I'm glad Esther is also here as well. And I do look forward to us collaborating on various fronts as the days go by as well. I hope this has been because for me, I have also learned a lot. You know, I came here thinking I know stuff, but I've been schooled by you guys. I'm grateful. You know, the algorithm model that UNCAP uses is actually very fascinating. I intend to actually go learn and read more about it, and also use that in our work with the AI space that we're working on as well. But you know, and also with what Kes is doing, Kes one I've been speaking with for a long time, and yet each time he speaks, I haven't still learn more and more from his reservoir of knowledge. And Ife, Superstar also, really appreciate you all taking your time out to have these conversations. We will continue to have the conversations periodically, but also in between that period, begin to put in the work and also help support early stage startups across Africa as we can as well. I think I would leave Anthony to give the closing remarks, but I'll say thank you to all our audience and thank you to the speakers as well.
Thank you, Deji. That was quite the moderation. To Esther, I'm learning more about UNCAP, to Ife learning more about what you do, and to Kessie, it was quite insightful. And I want to believe I'm not the only one who left here knowing more than we came to the table with. I want to thank you for taking out your morning to be here with us and to share this knowledge with founders and those who are thinking of becoming founders and those who are thinking of how they can overhaul their company. And Hamu Legal is always there to provide legal support and regulatory compliance support to startups both here in Nigeria, Africa, and the world at large. We are very happy to come on board and partner with Esther, UNCAP, Kessie, and Ife, whatever you are doing. We're very much happy and delighted to come on board. And we look forward to having more fireside chats like this. And Deji, a huge thank you to you and your team for pulling the heavy shots from behind the scene. And to my team also at Hamu Legal for also providing all necessary support that was needed to make this a success. And to our participants, we are really grateful to all of you for taking out your time to be here. Having the panelists wouldn't have been enough if you weren't here to tap from their knowledge. So thank you very much. And I want to wish us a very lovely day ahead. And please do not forget to follow Tech Hive Advisory and Hamuligo on all platforms. We are everywhere. And do have a lovely day to yourself. Thank you.
Thank you, guys.
Thank you. Yes.